If you're thinking about selling or buying a home right here in the Reno-Sparks area, you need to stay tuned for this market update video. We're going to cover all the stats, trends, and charts you need to make the best decision possible. Stay tuned.
Assist to sell way smarter.
Hello, everybody, and welcome back to the quick Reno-Sparks real estate market update, this time for November 2023. It's great to be back with you. Quick overview. This is for the Reno-Sparks metro area only. It does not include Fernley, Fallon, Minden, Carson, Gardnerville, etc. This is for single family residential properties only, basically houses and condos. We don't cover commercial or business opportunities or land, lots, etc. Just single family residential properties. So let's dive right in. One of the first things we always look at that everybody likes to know is the median price right here in the Reno-Sparks area, and that sits at $580,000. Now, it is going to be slightly higher in Reno, slightly lower over in Sparks. Now, before we move on, let's talk about these charts. As you can see, it does say October 2023. That's because, as I mentioned, the stats are through the end of October. When it says prior period, that means the month before. So in this case, September of 2023. And when you see the same period prior year, that would be October of 2022, a year ago. So we're sitting at 580,000, which is up 3.6% from September and is up 8.4% from 2022 at this same time frame. If you look at the bottom of these charts, you can see we've got dates along the bottom here and the actual prices on the XY axis here. Let's talk about mortgage rates, because that has the biggest impact on the previous chart, which was median home price. And you can go back to 20 years ago, and on the bottom of this screen, I know it's kind of hard to see. We'll see if we can't blow that up. It goes from 2003 on the left all the way up to 2023, so 20 years back. On the left side over here is interest rates, the actual number, interest rate numbers. So 2%, 3%, 4, 5, 6, and so on. And as you can see, back in 20 years ago, it was roughly 6%. A little above, a little below, kind of fluctuated right around 6 to 6.5%. Now, the good news is we did see a slight pullback recently to about 7.25. So any kind of drop is a bit of relief that we could all use. Let's dive into some numbers like active listing. Now, active inventory or active listings, these are the current number of homes on the market. So if you're going to go out and look for a property today, maybe you're thinking about buying. Now, if you're thinking about selling your home, this is your direct competition. This is the number of homes you're going to be competing against if you try to sell your home. Right now, we're sitting at 937. That's down 5.7% from September, and it's down almost 35% from 2022. So down significantly, 34.3%. Now let's dig a little deeper. Now this chart, if you look at the bottom here, this is actual price ranges, and this is the number of homes. So we're going to look at by price, how many homes of the active inventory by price. So you can see there's not a whole lot going on below 400,000. When we hit the 400,000, this is 4 to 5, 5 to 6, 6 to 7, and so on. Relatively stable market in terms of inventory or active inventory on the market. Now let's look at new listing. New listings versus active, what's the difference? This is a number of listings that came on the market in the month of October. This gives us a good idea of the flow of listings. How many home sellers are saying, yep, it's time to sell. Now, these could have sold. Some of these might have already sold and then be in escrow and ready to close. Some of these may be part of that previous chart of 931. We don't know, but it gives you a good idea of how many people are putting their homes on the market. 421 in October. That's down from September, where we're sitting at 473, down 11%. We're down 8.5% from 2022. Let's look at new listings by price. And as you can see, significantly less listings coming on the market at the upper end price range. The majority of listings are coming on the market between 4 and about 650, 700,000. You can see that in the chart here. Now let's look at closed sales. So we looked at currently active, we looked at new listings, and let's look at how many of those actually sold. And again, this chart, as you see on the bottom, goes back about 10 years. We had 384 sales, which is down 9.2% from September, where we had 423, and it's down 6.6% overall from the same time last year in 2022. Now, our market, like any other, is very cyclical, and you can see that on the chart. Normally what you see is January, February, March, you start to see the market heat up. People put their homes on the market, they sell shortly thereafter. And then we see this kind of peak in the spring, summer months, and then it generally falls off into where we are today, October, November, into December. So this is very normal, but what is abnormal is the number of transactions. Let's look at closed by price. Again, nothing out of the ordinary here. More homes sell at lower end price ranges. In this case, 4 to 500 is the highest, 5 to 6, 6 to 7, and so on. You can see all those numbers here. Let's take a look at months inventory. So we're sitting at 2.4 months, but the story gets a lot more interesting when you look at by price range. And if you look at $1 million plus, clearly well above 6 months, you're starting and already in a buyer's market. Now, when you go to 750 to 9, you're still below 3. So you're hitting that stable market point where, yeah, things will sell, but they're going to take a little bit longer. And as you go lower in price range, you start to see that we're entering, or we are in, a seller's market. Now, a couple of charts I wanted to throw in here that have me a little concerned and something to keep an eye on, and that is Housing Affordability Index. Now, when you see 100 on this chart, that means the median income earner could earn 100, could purchase 100% of the median price. In other words, if I'm making $75,000, I can afford $580. Now, when that number drops below 100, the median income earner can afford less than. So when you see this number, this chart up, that's a good thing. That means homes are more affordable. Affordability rates are extremely low. I want to see this turn around. And normally you would have this turn around one of two ways. Either prices drop or interest rates drop, or a combination of two. Maybe interest rates come down to 6.5%, 6%. Prices fall from 580 down to 500 or a little bit less. That's when you would start to see this affordability rise again. Here's the other thing that has me concerned. And these charts kind of go hand in hand, and that is total number of sales. Now, this is through October going back 10 years. Now, this is total sales in the entire market in Reno-Sparks area, right? So a normal sort of strong, good year would be right around 5,200 to 5,800 sales. 6,000 or above is considered a really strong, heavy sales market. That's a good thing. Anything below, say, 5,000 is considered slow. We're sitting at 4,152. To give you a little example of how low that is, you would have to go clear back to the bottom of the recession. I believe it was 2008 or 9, and we were just about 4,200. Before that, it was the early 2000s before we saw numbers this low. Now, think about what's happened in the Reno-Sparks area over the last 20 plus years, right? Spanish Springs, North Valleys, Double Diamond, Demont, everywhere has exploded. There's been houses being built, apartments being built, the population has increased, and yet our sales numbers this year are actually less than we saw nearly 20 years ago. So there you have it. Before we wrap it up, I did want to mention, if you do want to sell your home, you owe it to yourself to check out Assist to Sell. ForRenoHomes.com is the website. At Assist to Sell, we've been here in Reno-Sparks since 1987. We actually started here. Very few people know that. We started here in Reno-Sparks, and we can sell your home for only $4,995, which is an incredible value considering if you had to sell the median home price at $580,000. Let's just round it off to roughly $600,000, and you were charged 6%. That's $36,000. Even 5% is $30,000. So a significant amount of money. So $5,000 is a great value to sell your home. When you sell your home and you hire a realtor, you want somebody that can get the job done, and we certainly can. But more importantly, you want to put money from your hard-earned equity and all the payments you've paid and the fix-up you've done on the house. You want to put that equity back in your pocket, not into a real estate agent's. We're here to make that possible and happen. So don't hesitate to reach out. Regardless of what happens or what you choose to do going forward, wish you nothing but the best. Have a wonderful Thanksgiving. We'll catch you next month right here on the Reno-Sparks Real Estate Market Update. Bye-bye.
Assist to sell way smarter.